Hello, hello, hello. Happy non-farm payrolls Friday, everyone. Got to get through this quickly. I have some tree service showing up for an emergency tree issue. So hopefully they might interrupt the live stream. Just letting you know. We'll try to get through it. Patrick, happy Friday. Hey, Tony. Royal Palms, good morning. Jacob, good morning. Hey, MJ, glad you could catch this one live, and hopefully I won't have to end it early. Oh boy, let's just get right to it, everyone. Uh, the unemployment numbers coming in. Biggest thing is was the last 6 months have been all revised lower. The revisions so far have been 13% cumulative lower, so that's pretty interesting. The headline number coming in better than forecast at 3.5%. The big thing was the average hourly earnings year over year. Forecast 4.2 coming in at 4.4. Month over month, forecast of 0.3 coming in at 0.4. So the earnings coming in hot, which is still inflationary. Now, the month over month, the non-farm payrolls private number coming in at 172 or lower. That number can't be right. Hold on, where's the other? There I want the non-farm payrolls headline number. Forecast 190-200 coming in at 187, so a little lighter. The U6 unemployment rate coming in better than expected also. So overall, sort of a mixed report, but the wage component, that's not good for inflationary stuff, but the market looks like it wants to bounce. Hey, Options 22, good morning, Anissa. Also, after Amazon's earnings yesterday. See, this is the whole earnings game where Amazon really, their forecast got dialed back, really, and then they beat. Now, it was a good report, don't get me wrong, but they beat a very dialed back earnings forecast. And you also had Apple, which as things are slowing down for Apple, and Apple's not in growth mode right now, and we're still paying 32 times PE now. People are paying over 300 times PE for Amazon. It's just nuts, but it's up almost 9.5%. So Apple pulled back, but now since that non-farm payrolls, you've had some of the mega caps kicking in. So we could see a continued follow-through bounce. Consumer cyclical, utilities and comm services leading. Technology was lagging mainly due to Apple, but that's starting to close in on positive again. Fed watch tool, it's still the pause and then a cut in March. Fear and greed right at the border, back between greed and extreme greed. Earnings, I talked about Amazon and Apple, which were the two major ones, and they're both in the mega cap department. If Apple can snap by, if you have dip buyers come in, I'm going to watch for at least some upwards pressure. We had some double bottoms trigger yesterday on the 1 hour time frame. The NASDAQ one completed, the S&P has not yet. This morning there was not much. I didn't even look. I was focused on non-farm payrolls this morning. So that's where that sits. Here's what I'm watching for. Also, if we do follow through above yesterday's high and then close above it, it's an aggressive percent B buy. It's even more aggressive because it's not against the daily rotation zone, but it's closed below the daily rotation zone, and we have not yet entered the weekly rotation zone. So this is a no man's land. What I need to, for any significant follow through, if yesterday's lows hold, I'm going to be watching, not necessarily for today, but going into next week, this 45.8625. Close above that, then we have a gap right at that 75% harmonic, and I'll be watching for a retest this high area. But this market's starting to get very, very tired. The internals are starting to shift. So do keep an eye on that. That does not mean the rally has to be over, but it's getting tired. This, we had the stop raise, and by the way, I guess it's technically over now. The stalled out at the first target. The NASDAQ one, though, completed yesterday. So there might be a slight upwards bias. I'm going to be watching this VIX also because it double topped yesterday. and stalled and then finally broke, and now it looks like it's going to go back into the key 15 level of support. If it starts breaking below that, I'll watch for some more for a more possibly sustained rally. So that's where that sits real quick. What else? So NASDAQ, let's see what levels we have. Again, we are holding the bottom of the channel right now. Key resistance is still this 15,562 area. Close above yesterday's high is technically a %B buy and would close above the prior resistance becoming prior support becoming resistance area, so that would turn it back into support, and there is still a gap behind with the upper edge of the channel. It's another thing I'm watching for. Dow, we have triggered the double top. We are bouncing a bit, so on any bounce I'm watching for another rollover move, keeping in mind that this is the slightly lower probability one because it's against the daily rotation zone. But we'll be watching for a bounce and then a roll over there. The Russell still not able to close below the key support is 1965, spiking below it multiple times, but you see the number of spikes below it and not closing below it. So that is still a very key level on a closing basis. If we do break down below that 1943, other than that, similar to the S&P, I'm going to be looking at the retracement levels. My first key target area is 1986 on a bounce, and then it has to close above 1994 before I can get bullish even for the gap fill. All right. Hey, Pep. Good day, Christoph. Engulfing candle. Yeah, we have to see where today closes, but it is an engulfing. You are correct. And if it closes below last week's low, it is much stronger on the bearish side. That's why I'm also saying I'm watching for a bounce and then a rollover move, or at least a pause and then a rollover move. This will get interesting going into Sunday night. So definitely stuff's starting to shift, and then I'll watch for the bigger pullback into the weekly rotation zone. All right, let's get through a few more markets. Again, I already covered the VIX. The notes, by the way, coming back down to the 87.5 level. So that completed right there. That does not mean it has to pause, but I'm looking for a little pause and a bounce into the rotation zone. The next key level, if we break today's low, is 109.09, and then a retest of the lows set up last October. The yield on the 10-year tapped the 87.5. You see this. So that completed the 87.5 rule this morning. And I'm watching the key support is about this 406, 407 area with the rising rotation zone. So I'm paying attention to that. The 10-2s, it still holding. Down a little from yesterday, but still holding. I'm also watching the retracement levels on this for the close above the -52 level if this keeps going higher. Dollar index finally getting the pause, bigger pullback off non-farm payrolls. Tested at first level support, this 101.60. Key for me is 101.30. That's the major level of support, the key breakout level, and we're probably going to see some adjustments, some profit taking today, and a possible some of the short covering from earlier this week also in the markets. So this would be some profit taking after a pause bar yesterday with the non-farm payrolls report. Crude, we do have a double top pattern, potential double top. It would need at least a 4-hour close below 78.69. That's the only bearish thing. We have pulled back, caught in the rotation zone, rotated back up, slowly chipping away. I'm still watching for a breakout move in crude. The only thing that would change that in the short term is triggering that double. So 83.25 area is still key on a closing basis. Gold is still, we've not yet fully gap fill. This is a rotation back up, weakening dollar, but I'm still watching for the gap fill, and this channel is still holding. Other than that, I don't have any great patterns. Pep thinks he has an inverse head and shoulders. Not in my book. So silver, we talked about yesterday, completed the double and is now looking with a slight bounce, but I'm still watching for some rollover plays in gold and silver. Now, that's in the short term. Long term, I'm bullish. 10-year on the yen pausing at the 65 level still, but no major pullback in there. The yen right now pulling against some key support. So I want to see if this holds or if it breaks, how much the close is below there. Euro, we're getting the reversal with the dollar pullback, but I'll be watching for another rotation back down. The pound, pretty weak bounce also. Bitcoin, still hovering right here, watching for something to go sideways on Bitcoin. Something's just not right out there. Let's take a look at the spiders and the Qs. The spiders, we're getting the gap up. The gap up today, 450.82. So 450.150 still. And then I'll be looking for the open. 453.25 on a stronger rally. On a rollover play, it's yesterday's low I'm paying attention to first at 449.35, and then the closing print at 448.84. Again, it's a weaker percent B buy if it does close above yesterday's high, which is coming in at 450.79. So on we're trading above that slightly now, so I'm going to be paying attention to that intraday and see how we're trading around there. But remember, we're sort of in no man's land also with the spiders. No close in the weekly rotation zone yet. And the daily we're now below the rotation zone, but we didn't close technically below it yesterday. So this is a mixed market. I'd be looking more to Sunday night, Monday mornings for any setting up more plays. I would, personally, if anything's trigger with this kind of weird day on a non-farm Fridays payroll with the earnings from Amazon, I'd be more looking to see how it opens Sunday night and then trades in the European session before establishing any kind of core bounce position. That's my personal preference. So 375.75 area, trading right about there on the market. That's where I'm watching. If we roll over from there, it would be for the gap fill. 373.79, and then the key low from yesterday, 371.77. To the upside on the Qs, you really have to start getting above about 376.70 to tackle 379.21, and then you still have, that's the opening from Wednesday, and then you still have a gap fill beyond that if it does get bullish for next week. Tesla, still, now we're starting to chip away at the 50. I'm watching for, if we rallied, 267.50 is still key resistance, and I'm going to be watching for a rollover play. The only thing at this point that could get me into more of a bullish mode would be a close back above 281. NVIDIA still flagging down. The key resistance coming in about 468 right now. On any rally, though, I'm paying attention to 458.31, which is the open from Wednesday, if it can actually get any rally on. Amazon, you see here, we closed above the 62.5, and now we're going to complete the 87.5 rule. So there you go. Amazon on this last pullback. That's not from the all-time highs. That's from this last pullback. Does that mean it has to stop there? No, but there's going to be some major resistance coming up at 146. If it did break out above that over the next week or so, if it can sustain this, I don't think it can, but not at over 300 times earnings. Or I don't. It's going to be slightly lower than that, but now it's still going to be some absurd earnings multiple. The harmonics, these are the reverse harmonics I'd use, and the next target would be 154.68. All right, and Apple from yesterday. Apple closing yesterday below the rotation zone. It did beat, but slowing growth. 186.68 was my next major support area. I have to see if it regains that today. That's going to be key on the closing. That's not only this support level. So you had resistance becoming support and the 50 lining up there. So we have a minor cluster. I want to see if that can regain it. We could get at least a partial gap fill. If it can't regain that, then it's going more into aggressive rollover mode, and one of the Magnificent Seven could be in for a bigger pullback. And the next major level is 181, and that to 179. All right. So do I see a potential double top in AI? I'll look at that. Then we'll have to do more next week because I have to deal with the tree stuff in AI. No, nope. There is no great pattern. Although if you start losing about the 37 area, I'd be watching for the pullback to the major support base at 3170, and if that breaks, it'd be the 200. But here's the key area I'd be watching for the buying pressure waning. Okay, about 37. All right, with that, so I have to wrap it up early and deal with the tree stuff. I thank you, everyone, for tuning in, and I'll see everyone next week. Bye for now.